Good morning and welcome to another In the News with Sapphire. Welcome to In the News on the 26th of July, 2021. Welcome this morning. I've got lots of news to share with you this morning. But firstly, I would like to say if you want to leave a comment, please make sure that you leave your name so I can say good morning directly to you. And please share your comments and all the news that you may have that you want me to read for you. In some other unusual news, yesterday, whoever lives in East London, East Ham namely, and Forest Gate in those areas, there was some torrential rain yesterday. Now, I don't normally do weather reports, but this was very unusual because it flooded that area really bad, flooded people's homes. It actually affected my one of my daughter's homes as well. It flooded out the whole of her basement flat. It was sewage pipe bursts and it was over flooded in the roads as well. People were literally ankle deep in dirty water. So if you was in that area, I hope everything is sorted out for you and that the water boards are getting it sorted out to unblock these drains and find out what's going on. So I hope everything went well and that it didn't cause too much damage for you. So what do we have coming up today? We're going to share with you all the latest news that I thought was really good to pull out so that we can, get an idea of what's going on in the property world, the legislation world, government, estate agents, and finance world. So I hope you enjoyed this morning's In the News, and later on I will share with you up and coming things, events for the Savvy Women Group this week. So first of all, our first news report is HMRC warns a negative impact of coronavirus on sales figures. HMR Revenue and Customer has warned of what is called a negative impact of the pandemic on the latest property transaction figures. HMRC says that 213,120 transactions last month meant that there was a 219.1% increase in residential transactions from June 2020 to June 2021, which is 74.1% higher than the year-on-year figures in May of this year. However, HMRC warns that the housing market was almost wholly shut down a year earlier, making annual comparisons very difficult, which is basically true because you can't really compare if the place has been locked down. So, and also there was a significant evidence of foretelling in the property market in June this year, with transaction completed early to take advantage of the stamp duty holiday, which ended for properties up to $500,000 on June the 30th. Nick Lemon, chairman of Jackson Stops, says, "We anticipate transactions dipping slightly over coming months from the record-breaking levels as SDLT holidays, that's stamp duty, tapers off. But overall, we expect the market to remain highly active for the foreseeable future for several reasons. While many have sought to take advantage of the flexible working to make more move further onto the suburbs or countryside, the work from home message has now been lifted. Buyers will now have to consider how best to split their time between the office and remote working and how their homes can best facilitate this." An agent and former Rick's residential facility chair, Jeremy Leaf, adds, "These figures clearly illustrates the frenzy rush to the finishing line for buyers to take advantage before the stamp duty holiday drew to a close. However, activity has reduced since, particularly in London, where the savings were greatest. Early signs are the sales will be down significantly, but we have noticed nearly all of the transactions are continuing with various leads and negotiations. These leads us to believe prices will not markedly different over the next few months. So what do you think? Do you think prices are still going to be buoyant? Do you think that the prices of the properties are going to go up, down? Do you think the frenzy will still continue? Good morning, Maureen. Lovely to have you here. Lucien Cooks of Savills, head of the residential research, comments, we expect to see a third peak of transactions in September, when the final remnants of the stamp duty holiday really comes to an end, given the maximum saving has followed from 15,000 to 2,500, it is likely to be less pronounced. So what do you think about that? Do you think it's that the HMRC warning about the negative impact is actually true? So give your comments, please. I'd love to hear your opinions. In avenues, estate agents must adapt to compete with self-employed lifestyle, they claim. A leading industry personnel expert says agencies must be more attracted new staff, and basically including adapting how they work to compete with the increasingly importance of self-employment model. When your last month job vacancies in the UK rose to the highest level of almost 24 years, but at the same time, the supply, both permanent and temporary staff, fell quickest on that rate. As a result, there was an estate agent out there asking themselves, where is everyone? Hennis says one of the reasons why the industry is in the current position is the rise of self-employment agencies and businesses. And a lot of people are getting into self-employment more than working for an agency, the typical 9 to 5. So it says lockdown has given candidates time to readjust their priorities. An estate agent is not a job with a typical 9 to 5 hours. A significant number of staff have chosen to leave the sector, often taking a hit on earnings for a better quality of life. And I think a lot of people are looking for a better quality of life after the last year that we've had. So if you're an estate agent, obviously it's out of hours, because if you've got viewings for clients outside of these hours, you're working weekends probably as well, outside of the typical 9 to 5. And people probably have taken a stock of their life and said, you know what, I don't want to be doing these kind of hours anymore. So I'm leaving the industry. And on on top of all of that, many agencies want someone with 12 to 18 months experience. Now, if you haven't got that, you're not going to apply for it, because you already know that if you want experience and you don't have experience getting into this industry, that's what people is going to, judge you on to get the job in the first instance. So a lot of people are not being qualified, and especially that we was out a year, they didn't even have the opportunity to get the experience over last year. So again, that's why people are not getting into it. All of this means that recruiting good quality staff in the future is clearly going to become more challenging than ever. Well, I can see that. What do you think about estate agency jobs? I mean, I teach several different property strategies, and one of the things people do not jump out at is to become an estate agent. What do you think about estate agents, the traditional way nowadays? Do you enjoy still going into the high street and visiting your estate agent? Do you enjoy still working with an estate agent, or do you enjoy working with an independent, someone who's self-employed, flexible, working at home, working their own hours? Please share in the comments. In avenues, government, Tory says rich getting a free pass on current property tax. A young Conservative says the rich are getting a free pass thanks to the current council tax system, and there should instead be a different model property tax. Tom Spencer, writing on the Conservative Home website, says council tax was a hastily created fiscal measurement to replace the hated poll tax. Now, I'm old enough to remember the poll tax. Who here remembers the poll tax? Share with me. Which is now out of date, because it is based on the property values at the time of its when it was done in 30 years ago. I can't even believe it's 30 years ago that we switched out from poll tax to council tax. This means that the homes which have had the highest amount of price growth will be paying based on the undervaluation of their property. And of course, those in areas of poor growth end up paying based on the gross overvaluation, he writes. Effectively, this means the rich are getting a free pass and those on low and middle income are getting a real rough deal. After all, the areas with high price growth over the last 30 years all happened to be the richest areas. What do you have to say about that? He says the most popular alternative advocate by the least 8 Conservatives of 9 Labour MPs would be a so-called proportional property tax. Instead of letting each council impose the tax at a different rate based on the valuation older than this will use a model technology to reevaluate the properties annually and tax everybody equally at 0.48% based on the valuation proposed, Spencer. He says that this will prompt a cut of 75% of the current taxpayers, which I think is a good idea to level it out, level the playing field, and let's see whether that actually works. And if something's out of date, yes, we are moving through time, so, correct it. His proposal comes just as the Housing Committee and Local Government Committee of MPs suggest something similar, either a fundamental reform of revaluations of homes to make the current council tax system work more better, or should I say work more smarter, or its replacement with a proportional property tax. So what's your opinion on that? Do you think that the council tax is out of date? Do you think it should be changed? Do you agree with what he is saying on this? Should it be changed in favour, equally of favour of anyone that's having to pay council tax and not just the elitists? In avenues, housing, surging sellers leaving London date back to 2018, claims news analysts. New research suggests that the number of owners inquiring to sell across Greater London has increased by 68% since 2018. However, the pandemic has exacerbated this trend. Comparing the January to May period this year with last year, there's been a rise of 81%. The largest increase in inquiries was in Hackney. Now, I'm a Hackney girl. I used to come from Hackney as well. Thank you for your comment. I was born and raised in Hackney, so I understand how Hackney valuation has gone up over time as well. And Maureen says, yes, since the pandemic, people have had the time to become more creative and are self-employed and happy. Social media has also boosted their business. I totally agree with you, Maureen. It has become more prevalent for people to become self-employed. Some have been laid off, some have been made redundant. So yeah, becoming self-employed is a good thing. It allows you then to choose as an estate agent who you're working with, what areas you're working with, and what hours, more to the point, that you'll be doing. So thank you for your comment. So yeah, basically the surges do go back to 2018, but it says the increase in inquiries were in Hackney, that's 225%, Lambeth 174%, and Islington 172%. Now these are somewhat rich boroughs, and I say rich in the sense of the valuation of the properties in those areas are quite high. Some areas of Hackney over £1 million properties. Islington definitely you can go up a few million there, and Lambeth is another popular place where you'll be paying a lot for properties. The boroughs with the lowest increase inquiries were Bromley, which increased by 12%, and Havering increased by 17%. So what do you think about that? Do you think the increase in these areas that I just mentioned are good increase, or what's your opinion? The City of London was the only borough within Greater London not to have seen a rise in home owners looking to sell in the last year. In fact, inquiries fell and dropped by 25%. The research was conducted by quick sell company We Buy Any Property and was based on the number of house sales inquiries received between January 2018 and May 2021. Now, would you put your property on the market? Did you try to put your property on the market? And if you did you expect what you got? Or did you get more for what when you put your property on the market? I know there's been a lot of influx of people trying to buy properties and saying that, you know, the prices are so high. I'm running a workshop myself to show my members how to look at properties and where to find the properties without someone coming to, I'm going to use the word loosely, but gazumping your deals and going in there, how to negotiate a deal, what you should look for in a property so you can get the best out of that property when you purchase it. So I will be running the workshop and I'll give you more details as we go on in the news. Good morning, Angel. Lovely to have you here. So in avenues, there is another thing that I find very fascinating, the pay-per-view property service launches. Now, what is a pay-per-view property service? It's an online service with ViewRabbit. It's been tested by a limited number of leading agents who use it for properties with a very high inquiries, according to a statement on its website. The pay-to-view process automatically sorts serious movers from nosy neighbors, holiday makers, wannabes, and tire kickers who rob serious movers from precious viewing slots. The service claims the successful viewing booking fee is a refund by the agent when they complete their purchase or sign a rental contract. The website continues, it's so frustrating to miss out on properties because it was snapped up before you had a chance to see it, especially if some of the people who did not view the property were not serious. So they're charging at £30 or from £30, depending on the type of property and the valuation of the property, I suppose, or rental valuation or sales. Some properties listed on the ViewRabbit can be viewed for free, but there's viewings can be cancelled. For example, if the property is sold or let before people arrive. Site founder Michael Riley says ViewRabbit is a UK company that has developed the world's first pay-to-view property platform, allowing agents to create income from the market demand side without creating a conflict of interest for the fee-paying client. What do you think about that pay-to-view? Do you think it's a good idea if you want to see a property rental or sell that you're going to pay to view it so you can bump out the people that are just wasting time viewing properties? I really want to hear your opinion on this one, because I think there's a bit of, you know, let's see how we can make money situation going on here, rather than that it's something that people really are in demand of. What do you think, though? Have they come up with an ingenious way of getting rid of tire kickers and things like that? Let me hear your opinion on this. In avenues, housing market. The market to slow drastically in autumn, analysts predict. A post-lockdown housing market boom is showing signs of a significant slowdown according to new forecasts. The prediction from the quote website Really Moving shows that after a long bull run, and I heard that bull run in crypto, so yeah, a long bull run on the back of the stamp duty holiday, prices will swing into reverse by September with a small dip. The analysis suggests that house prices in England and Wales will grow by an annual rate of 3.8% by the end of this month, slowly dramatically to just 0.4% by the end of August, and then falling back again another small 0.12% by the end of September. Really Moving's figures are based on an analysis of 29,000 complete conveyancing quote forms, which says allows to anticipate demand, thus price moving for the next 3 months. Rob from the website's chief executive comments, a slowdown in a remarkable rate of growth we've seen over the last few months was inevitable, and looking ahead over the next 3 months, the data indicates that the market's softening, which will be reflected in completing sales and data heading into the autumn. Now, what do you think of that? Good morning, Charmaine. She comment on the last post we had. No, I don't think you should pay to view. I totally agree with you. Thanks, Maureen and Charmaine, for chiming in on that. I really don't think you should pay to view. I agree with you. But however, there obviously is a reason why they've come up with this idea of doing it, because there is people that are missing out when you're looking to view. And if you're going to get a refund at the back end of it, then you're serious about it then. So when you're looking at things, you've got to look at it from both sides. If you're a serious buyer and you pay to view something and you're serious about getting that property, after all, you've done all your work, you've made sure that it's something that you want to get, then, you know, it takes out people that are not serious about getting it, and it gets you in there to view that property and can be able to purchase. So there's a positive and negatives on it. But the fact that they're offering you back a refund, there shouldn't be no negatives if you are looking to purchase. 1 minute. I have a bit of a cold, so excuse me. So yeah, back to this news. And despite this adjustment for these rates dropping in, or literally slowing down in autumn, what do you think about that? It says there it will be a contingency of buyers who realized pretty quickly that the rising prices were sweeping out any tax savings, and decided to hold off until the market cooled down. And a lot of people are doing that. They're playing the game, the waiting game. Let's see how the markets moves. We've just had a drop in stamp duty, so that holiday is now finished. Let's now see how the role plays out in the autumn. So we've really got to look at what is really happening. Drop the stream link. I'm not even sure how to do that. Hi, Roland. I'm not sure how to drop the stream link here. I am so not techie, so I apologize in advance. Oh, is it share? I'm not sure how to do that. And I apologize, but I will put the stream link in future into all of the chats. Okay, so in avenues, what do you think about that? Do you think that the prices are going to slow down come autumn, or is it just naturally a slowdown in autumn simply because it is autumn? In avenues today, Boots joins John Lewis and Lloyd's in entering the property sector space. Now, what do you think about that? Again, another big company that we all know, love on the high street, are now joining the property race. So there's something in this that is moving people into this space. I mean, do they sit down at their company head tables and decide, you know, all of a sudden, after so much years that investment has been going on, that we're now going to start investing? Or has the shift last year jolted people into thinking, you know what, we need to also cover our heads? Because if our shops close down, and which they have, the banks were closed, the shops were closed, if those closed down, what additional revenue have they got coming in? Because no one's buying in their places. So what do they have coming in, despite Boots was allowed to be open because they were had chemists? But again, they still lost revenue. So I think getting into the space is a good thing. But do you think getting into the space, do you think Lloyd's, Boots, John Lewis is entering in the property space is a good thing? So Boots is the latest company to dip their toe into the property waters. Modular housing companies like Homes have been selected by Boots to deliver a 622 home scheme in Beeston in Nottingham. The deal involves 43 acres housing site close to Boots UK headquarters and is part of a wide wider 286 acres in Nottingham Enterprise Zone. Ike Holmes says it will create a model village development of 505 houses and 117 flats. All the houses will be modular with an energy performance certificate rating at least a B. Ike, which claims that this EPC rating will make the Boots property more energy efficient than that. Oh, that's a good rate. 92% of new builds in the UK. Says the modular homes will be delivered in a sustainable, efficient manner, which aligns closely with Boots' long-standing vision of caring for people and communities around the world. Mike Chives, Director of Estates of Boots UK, we are delighted to partner with Ike Holmes to develop this site to provide high-quality, affordable, definition of affordable and energy efficient housing for people in the local area, because historically significance of this site and everything is in represented or in terms of their company heritage, and it is vital that we find the right partners, and they're pleased that the site is being put to good use. So what do you think about that? What do you think about it, them getting into this space? Earlier this month, John Lewis Partnership released details of an ambitious plan as well, and furnished private rental properties. And less than a fortnight ago, Lloyds Bank revealed that tenants will, within the next few weeks, move into the first of the series of new development, buying at its first entry of private rental. So what do you think about these companies getting into it? I'm awaiting large supermarkets to now get into the. I mean, supermarkets are already in the property when you look at the commercial units that they own as well. So they're in the commercial side of it. But I wonder if they're going to get into the residential side of it as well, and start to realize that there's somewhat profit or an opportunity for them in there. I just say watch this space, and if they do come out, then I'll be reading all about it. In avenues, the stamp duty holidays helped to improve prime central London markets. Property consultants Loan Risk says June was a record-breaking month for property sales in the capital, with exchanges up to 140% on the month's 5-year average. In addition, new instructions in the second quarter of the year were 36 higher than the same period of 2019, as well as being 13% higher than the second quarter averaging between 2015 to 2019. Both June and the second quarter transaction volumes exceeded levels seen in previous peaks in 2007 and 2014. Indeed, June 2021 was the busiest month on record, but the rise in activities is unlikely to be down to stamp duty initiatives alone. All price brackets say significant increase in activity, with the market below 1 million being the busiest. However, the busiest is at the top end of the market too. There are 45% more sales of property prices at 5 million. Can you imagine? Of more where the 15,000 savings is less likely to have been the make or break deciding factor for a buyer. Well, obviously, if you've got 5 million to spend, you're not going to look at if it's a make or break on the stamp duty. You've got the money and the affordability there. So, however, there was much more mixed news on the prices, which is a given. Good morning, Vanessa. Lovely to have you here. I wonder if small property developers will have less opportunity. What do you think? I don't think so, because it's always the thing that people feel that when you get into investments, that the pool is very segregated. There's a lot of developers that actually hand over small projects because they just think it is too small for them. I've known developers to hand over small projects saying, look, we've got this, but we don't want to do it. It's too small for us. Would you like the opportunity to do it? So I think it's open to everybody to have the opportunity, and it's who you are as an individual or business that you're running as well. When you're getting into this market, you got to move with the movers and shakers. You got to move with the big players as well. Someone like Boots or on the rental sides, Lloyds and that, yes, they may have, if they're developing properties to sell, you could go in there and say, look, we could sell some of your units and you can make some money from that. So there's a lot of ways you can work with these big conglomerates as well, and see if you can put your little stamp on it as well. But you've got to reach out and approach them in a professional manner as well. Thanks for that insight. Brilliant. You're welcome. Will these companies invest in social housing as there is a shortfall? You know, that's a good question, and one that deserves, definitely one that deserves an answer. I don't know whether they will or they won't, but if they go over a certain amount in their developments, they have to give back to social housing as well. That's the local, down to the local authorities to say, if you were going to give you planning permission, I remember back in the day, if you're going for planning permission and you've got X amount of units, you had to give some back to social housing anyway. So I don't know, you'd have to look on the planning application. You can actually find that out, how many units are being given back into the social sector, because there is that caveat in there. If you're going over developing a property, how many units you're doing for private, how many units you're doing for sale, and how many units you're throwing back in for social housing. And some developers are very ethical, which would then hand over units for social housing anyway. But I really believe social housing comes down to the local authorities as well. They need to become more robust in their developments and their building out, so that they can house those that are on their list. So there's a sort of a thing, are we leaving it down to the corporates to house for social housing, or should the local authorities be doing it? Should the government be looking into buying land and creating more social housing units? What do you think about that? It should be part of their, yes, it should be part of their corporate social responsibility, CSR, correct. Yeah, so I totally agree with you. It needs to, the social housing needs to be picked up, and it really definitely needs to pick up, because if you don't pick up the social housing, then there's a group of people that are always going to be left behind. And I don't think that the imbalance is right. I don't think people should have an imbalance. I think everyone should have the opportunity to live somewhere and have a roof over their head that they can call home. We all last year, that's where we were stuck in our homes. And for those that weren't, my heart was breaking for them, because everyone has a right to live somewhere. Everyone has a right to say, this is where I want to have a life. Because once you have a roof over your head, you feel more relaxed, and you feel like you can move through life and navigate through your own life, doing better for yourself. So social housing needs to pep up. So in avenues, we've got the finance and mortgage news. Self-employed says pandemic on the rising prices that they can't buy for the self-employed. The bank's latest study suggests that self-employed people, including myself, are increasingly pessimistic about the chance of them being able to get on a property ladder. Now, I'm self-employed, and when you're trying to buy property as well, for some reason, these banks do not like self-employed people. I'm not sure why that is, but there is ways that you can speak to brokers and try and get help in this area. The survey showed that 1 in 5 self-employed renters, this is for the rental people, say they are more motivated to buy due to the lockdown, but experience 1/4 are currently actively saving deposits. However, many now believe that the conditions for buying as a self-employed worker has worsened because of the lockdown. It says just 1/4 are saving up the deposits is more of a challenge now due to the financial impact of the pandemic. 1 out of 5 delayed their home buying plans, despite some 27% of self-employed renters now seeking to improve their credit boost their home buying chances of 14% says their credit score has been negatively impacted. Now, I speak on this a lot about impacting your credit. When you've got when you're trying to do something or build out a business, a property business, namely, or you're trying to get something on credit, you have to make sure you protect at all costs your credit score. Even if you're making a nominal payment, do not get a default. Talk to your creditors. I have a workshop that I ran last year or early this year, in fact, about how to repair your credit. So if you would like that link for that workshop, you can actually visit YouTube as well. It's actually on there. And I've got the letters, the templates that you can actually write to your creditors. Don't put yourself in debt and bury your head like an ostrich. There is help out there, and I'm willing to give you that help and help you sort out your credit so you don't have this negative impact on your credit file. We're all about protecting your credit so that when you do get yourself in a stable way, a stable income, then you know at least your credit was not affected by you not paying or being able to pay all what you're owed. So I'm happy to help you to sort that out, and watch our workshop on it because it was really a good workshop, how to repair your credit. It says over half of those questions think mortgage lenders do not do enough to support self-employed at all. A situation made worse because of the 14% of self-employed workers have inconsistent income as well, month for month. The number one reason for a mortgage application rejection for self-employed was being self-employed, with a third citing this as a reason for rejection of the application. The self-employed need to not despair, however, as there's a growth of specialist lenders out there, opening up increasing numbers of options that you can provide a pathway to home ownership. You know, has anybody else had a problem with getting a mortgage, being self-employed? You know, I'd love to hear your opinions on that. In other news, market boom partially down to rich house movers. A new analysis of the housing market suggests that the current frenzy is down to partly active in the most expensive sectors. Property data and data insight consultancy, home prices of above 750,000 have experienced an 83% growth since quarter 2019. What do you think about these price indicators of growth? It says, despite the stamp duty holiday of 500,000 threshold coming to an end, 250,000 threshold finishing in September, the number of people wanting to move has risen by 11%. People are wanting to move continuously around the UK now. Not everyone's concentrating on the London areas. Everyone's moving out. Kent, Milton Keynes, Liverpool, Birmingham. They just want to move out, and because you could get the same footprint for less when you do move out. And if you are comfortable with doing that, well, why not? Okay, according in avenues, 1 in 2 first-time buyers don't understand the mortgage process. Now, I know we've got a mortgage facilitator on here this morning, you know, and if you don't understand the process of what to go through in a mortgage, try and talk to a broker, understand, learn about it. It says, according to YouGov surveys by insurance providers Payment Shield, half of the UK adults under 35 are mystified by the mortgage process. The findings from the research shows that there is a worrying knowledge and confidence crisis among potential first-time buyers. 52% of UK adults aged between 18 and 34 say they have a fairly or very bad understanding of the whole mortgage process from beginning to end. There's a workshop there to teach people how the mortgage process actually works. Do you, even if you are over 34, do you actually understand the mortgage process? Do you know how the whole mortgage process actually works? If you do, just say yes in the comments. I'd love to hear whether you do understand the mortgage process, or is it something that needs to be taught to people. Understanding the mortgage and insurance process across age groups, Payment Shield's finding also showed a direct correlation between age and the understanding of the mortgage process. According to research, 32% of the 35 to 44-year-olds didn't understand the mortgage process, and this lowers to 25% amongst age 45 and 54. Do you think the mortgage process is down to whether affordability? I really want to understand how people think here. Yes, I believe. Sorry, Vanessa, you said yes, I believe so, but never to open to learn. Okay. Absolutely. First time buyers. Okay. Angel just dropped her details. So what do you think about that? If are you open to learning about mortgages? Is it something that actually interests you? Because that's another thing. If it doesn't interest you, you don't think you're going to have the opportunity to buy it. Why would you learn it? A lot of people think learning is a waste of time, but I think it's in preparation for what you want to actually do. So when you're looking at doing your research, the process of getting a mortgage, at least then when you come across to do it, it gives you a better understanding of it. The mortgage process should be taught. I totally agree with you, Maureen, and I think that's something I'm going to put on a workshop, what the actual process from start to finish. When you're looking at buying a property, what is the mortgage? Because people are never prepared. If you go to an auction, you have to understand the mortgage process. If you're a first-time buyer, you have to understand it. If you're moving home and you're buying a new property, you have to understand. You have to understand the mortgage process. If you're refinancing, there's so much different things you have to understand behind it if you're going into any of these areas. And what if you're up in the years? If you're mature, understanding the mortgage process, whether you can get a mortgage depending on your age. A lot of people don't know whether they can or not. And yes, you can get a mortgage, and no matter what your age is. There is a ceiling on that, but did you know that as well? So getting educated through this whole process is very key, and we've been looking to put a workshop on about that to help your limited or no knowledge on it. We'll definitely do that for you. James Watson, sales and debt director of Payment Shield, said the findings that 25 to 34-year-olds are nearly 7 times more likely to say they would prefer price comparison sites to seeking financial advice if they were purchasing a home. Insurance is alarming and risks leaving this already vulnerable cohort with insurance unfit for their needs. He said hopefully measures will likely to be done. Implementation of the FCA's GI pricing practice studies will go some way to address this by creating a fairer marketplace that offers consumers products to focus on the value that they are getting. Maurice says this gives me insight. Absolutely, the mortgage process is a minefield in itself. I mean, even me in the property space still gets perplexed by the different shifts in the mortgage space. And it's really hard for people that's not even in my space teaching it. You know, if you don't understand it, you're just a lay person coming in to get a mortgage. If you don't understand it, you'll feel lost and confused, and you'll just feel like you're on your own, which is really hard. Really hard for people to do. It's like, if you don't understand something, and people are not asking as well. That's another thing people don't like to do, is ask for help and ask for support. And that's why we do what we do, because we want people to reach out and ask for support. Because if you ask for support, you're going to 100% get it, and it will make your life and your process a lot easier as well. So in avenues, we've got mortgages roundup today. So I'm going to go through some mortgage roundups and tell you what's new on the market in the finance world and what is coming up. So Roma Finance has launched a new bridging and development range with improved rates and enhanced criteria. The new bridging range, called Roma Prime, is designed for borrowers with prime profiles and properties of standard residential construction. offering rates of 0.60%. The range applies to standard bridging, auction finance, and light refurbishments, covering a wide range of property projects. Its Romo Pro development range is also designed for borrowers with a prime profile who are looking to compete with larger development projects up to 5 million. So you can understand that when you're looking at projects and you're going to an auction room, you might have to get a bridging before you get the mortgage. So it's understanding those processes as well. And with people like Roma Finance being able to give you products as well that helps you with the bridging finance at such favorable rates, it's also wise to understand who's out there to help support your property journey. If you're an investor or a newbie to investing, who's out there to support your projects? You go to auction, have you got your mortgages lined up pre-auction? Have you got somebody, i.e. like Roma with bridging finance, to get you in to that property so you can purchase that goes through smoothly and knowing what rates you're going to pay? All of these things that I'm sharing with you today, we do teach as well. Angel says, depending on what industry you work in, lenders will lend to self-employed. The services industry, like catering, hotel, travel, etc., may face difficulties. Absolutely, only because of what is going on over the last year that they're going through that difficulties now, because obviously hospitality services took a knock last year. So lending on those kind of services, they will have to then look into it because they want to know there's some stability over a period of time before they can actually lend on it. So I agree with that. Owners of USwitch enters the mortgage market with Mojo acquisition. RVU owners of USwitch and Confuse.com and Money.co.uk is breaking into the UK mortgages sector by acquiring Mojo Mortgages. Mojo, the Manchester-based free online mortgage broker, delivers personal mortgage recommendations and has won industry awards, well done to them, for innovations such as mortgage scoring, an app designed to help first-time buyers get mortgage ready. RVU operates digital brands that empowers people to make confident decisions in the UK. These include USwitch, Confuse.com and Money.co.uk, all of which offers consumers the ability to compare and switch across a range of utilities, financial services products, including mortgages. Landbay reduces rates. This is another lender. Reduces rates on their core products range for landlords. Landbay has reduced the rates on their core product range by up to 0.24% alongside other key changes. New products from lender includes multi-unit freehold block mortgages available for first-time landlords. This is great news for first-time landlords, starting from 3.49%. This joins the new HMO products for first-time landlords launched earlier this month. New large loans, 65% loan to value, 5-year cashback products starting at 3.24%. New large loans, 65% loan to value, 5-year cashback products starting at 3.24%. Green buy to let mortgages reduced up to 0.14%, now starting at 2.99%. Paul Brett, Landbay's managing director of intermediaries, comments, "We are constantly looking to revise our range to make sure that it's highly competitive across every type of specialized buy-to-let mortgage. With our new competitive green products, plus MUFB and HMOs mortgages for first-time landlords." This is really good news for first-time landlords, and you know it gives you the opportunity to get on the market with favorable rates. The Nottingham unveils another lender. The Nottingham unveils a new 90% loan to value product and further cuts across their range as well. The Nottingham has launched a 2-year fixed 90% loan-to-value product and made further reductions across its residential rates. It says available for purchase or remortgage for new fee-free offering has introduced a rate at 2.75%. Just 2 weeks after lowering the rates across its range, the Building Society has also announced further cuts of up to 65 base points, BPS. The biggest reduction comes on another 2-year fix offering its fee-free 85% loan-to-value product, which is now priced at 2.25% from 2.90%. For those looking for a longer-term fixed option, the Nottingham's fee-free 5-year 85% loan-to-value mortgage has now been reduced to 2.55% from 3.10%. In the 75% loan-to-value, their 2-year fixed fee product is now 1.70%, 1.8%, and 2-year fix with a 999 fee or 199 upfront. It's down 5 BPS to 1.6%. So as you see, there's so much going on in this space. There's a lot offerings on the mortgage fronts. Hit up a mortgage broker and get the best benefits from these mortgages. It's really a good idea. Other rates as well being cut. Specialist buy-to-let lender Sapphire Home Loans has reduced rates across majority of its products. A buy-to-let mortgage product starting from 3.4% rates have been reduced by 0.25%. 2-year fixed standard buy-to-loan is now starting at 2.84%. Because there's so much competition on the market and so much things going on, they're reducing the rate. So it's not as if to say you can't get a good loan to value out there. You can on your purchases. So when you're looking, make sure you look at all the reduced rates. And I would always bring you the latest rate changes as well from different lenders as a whole. And remember to always seek advice from a regulated FCA broker. I share in the news what I read that's out there, that's been published. So when you're seeking legal advice, accountancy or financial advice, always go to those that are regulated as well, which is always a wise thing to do when you are purchasing anything property wise as well. So that's my in the news today. How have you felt about in my news today? Have you enjoyed it? What comments you've made? Quite a few comments, which I appreciate. And what do you have as well? What are you doing in your property space as well? Are you doing anything in your investment space? How's your business going? Do you have anything to share with us in the news with myself? If you do have any news that you want to share or topics that you would love me to discuss or even run a workshop on, I'm happy to do that. I run workshops when people suggest topics as well and that they're interested in, because then it forms an idea that they want to learn about. And surely if someone wants to know about something, there's got to be other people that want to know about it. So happy to put on these workshops. So what's coming up for the Savvy Women group this week? This week we've got Candid Moments with myself on Friday at 12 o'clock. On Saturday we've got Finance Talk, where I talk about our blogs. Our blog is out today, so look out for a link for that. And it's all about property investing and should you get into property investing. It's been written by one of our team as well. It's her first time writing a blog on behalf of the group, so I hope you enjoy her read as well. We've also got a PDF document giveaway with that blog, so look out for it. It will be shared in our groups and across social media. So if there's any comments that people want to share or anything that you want to say, any questions for me this morning? No questions for me. So I want everybody to have a lovely day, a lovely week. If you do have any questions, or if you're watching a replay, please put in hashtag replay and I'll come back. And if there's any comments or anything that you would like to share with me, or even have a e-coffee with me. Now, it could be an e-coffee or e-tea. I'm not fussed. But if you'd like a free discussion with me, I'm happy to do that. And if you require the link, please feel free to reach out and I will share my link that you could book an appointment with me to discuss your property needs, your financial needs, and anything that you feel that you want to discuss to help you in your business. It could be, it doesn't have to be property related. It can be business related too. I will help you with that. So thank you for joining me this morning. I look forward to sharing with more in the news with myself next week. Have a lovely day. Have a lovely week. And I'll see you all next week with In the News with Savvy Sapphire. Bye for now.